Alright, hey guys, welcome back to another episode of Stonks Maxxing, day 145. So, confluent earnings was yesterday, did a stream last night, felt really tired, so I went to sleep instead. Now, going to try and actually fill in some of the updates for our model, and subscription revenue. So Confluent Cloud was 138. So about 38%. Okay. Table flow. I guess platform. They don't give a detailed breakdown, I guess. Subscription revenue? Subscription revenue was 251. So if I add this, so this is 251 actually. Let's hard code this in here. I guess we could roll up both of these into the same line item. So it's just confluent platform. Because it seems like maybe they don't give us both numbers if one of them is kind of this upfront revenue recognition. Earnings report maybe? Oh, same thing. Okay. I might do this then. Just roll them up to each other. Okay. So I think from here, I guess we could just hard code these numbers in. So subscription revenue was 922. Just hard code that, and then confluent platform. And then I guess we'll change subscription revenue from just adding up these two. Okay, so 2024 2024. So this number is 492 million. Okay, that's not bad. Alright, and then this, let's just hard code to, actually we don't have to hard code it. I think year over year, if we take a look at this, okay, so I'm forecasting PCS revenue to actually accelerate in 2028. That's tough to say. I do want to. Okay, so subscription revenue, Confluent Cloud revenue, 2024, this number came out to be about 92,000. So it was right with the 53%. Okay, that's interesting. So it's actually above expectations. And Confluent platform revenue. So whatever this number, I guess, gives us. So 430 million. Which is actually pretty in line. A bit less than what I had originally thought. So it does seem like there's going to be some deceleration there. Faster than expected. Services revenue. So that number comes out to around 44551. Okay. So I just go change this back to black. So what does this do for, okay, this pushes our implied share price to about 36. Let's actually update the price right now. Confluent stock. Oh my god, it's at 36. Okay, it was up 20% today pretty much. I should have held on to. crying right now. What would be my options worth? How much would my options be worth if I didn't sell? I sold at $7. Man, they would have doubled in value. I guess I had a later maturity one. Yeah, it's hard to time this stuff. I'm not gonna lie. It's 7/18. Okay, so I had that until July. I think my $31 call. $30 call. Damn it. It's rough. I guess it probably is. %. Should have loaded up a bit more. Okay. Oh my god, it's going even higher. This is not good for us. Okay, so the customers. I think customers are kind of important. Is it not on here? Maybe it's in the investor presentation. Okay. Q3 24. Okay, 5120. Oh, with 100K ARR. 5120. Why are all of these? Let's do number. 5440, 5680, 5800. So I think initially yeah, I guess over time I can kind of build that delta. Okay. Ryan's estimate. A 100K ARR. Least value. Okay, and then this 2291260. Oh man, this is annoying. Okay, so definitely a lot less than what I had previously imagined. Yeah, we could keep that relationship going. Actually, I think I have to go look into the earnings report because I think somewhere along the lines they said 90% of companies' revenue was driven by. Oh, what the? Okay. Yeah, actually, let's see, what was my number beforehand? So average contract value, Ryan's estimate. 158, 168. For 194. Okay, they don't have anything on 5 million. 5. Oh, wait. So this actually is still in estimates. So about in line with what I was previously thinking of. So a bit overestimate on about 200, I guess 123 customers, and then 1 million ARR. What was that beforehand, actually? I could take a look at my other model to see. Okay, just leave this here for now. Actually, I don't want to screw everything up once I've changed it. Okay, so Brian's estimates. So I'm doing KAR minus. Oh, this should actually be blue. Yeah, we know that for sure. And this should also be green or blue. Okay. Oh, right. Actually. So we estimate the net new then. That's what we're really estimating. I think maybe the way I model this is a bit flawed, because I don't think I'm also considering if I convert a percentage from the levered here, that doesn't take away any customers from this tier. Yeah, that does add a bit of complexity into the model, I think. Yeah. 5% total year over year. Okay, makes sense. Ryan's estimate 65. In reality, it does seem like we're at 5,800. Okay, I'm definitely missing something here. Oh, right. Okay, so this number is Brian's estimates. Okay, so the actual yeah, nice, there we go. So I maybe undershot this, which is good. If they have a good amount of customers that are in the bottom end of the sales funnel, so to speak, then it's good potential for them to kind of win. Oh, God. Okay. So 18%, about 2% more than I previously expected. Hey, I wonder what confluence are. Oh my God, 3630? 3630, it's so high. For 35. Yeah, okay, so this is the highest it's ever been in a while, actually. So this is back in Q3, Q1, same time in Q4. Okay, and then disappointing year. Okay, so I guess this is a kind of wait and see moments. Well, a lot of volatility during earnings. I don't want us to get in at the top, especially with the Sembit fund. I think one thing though is they did not, so I don't think during maybe these swings there was a lot of I don't know what to call it, bullishness on software. I think that started to change probably towards the later half of 2024, not early in 2024, but I could be wrong. So let me actually delete this. I'm very hungry right now. God damn. So no border, let's do bottom, top, and right. I guess I do see what people were saying. Let's take a look actually what Micron's at. Alright, good. At 91. I think our fund is getting in at a pretty good price. Alright. Could be an interesting options. Now that I think of it, yeah, what are the options looking like on Micron? So okay, I see. Lower by a few ownership here. So it's really the not consumer, but it seems like the enterprise market outside of, we'll call it a traditional market for storage of memory, outside of AI, high bandwidth memory. By a few hundred basis points sequentially, between 37 and, okay. I don't mind making a longer term. Yeah, oh my god, these short-term options really got crushed. So first half of, oh god, these in the money options are actually really expensive. Okay, so third quarter. Okay, so delta, gamma, if you were to okay. Actually, let me leave this here. So it's not still an estimate for Q3 for fiscal year 2024. Not clear yet. Yeah, I guess we can still leave in those assumptions for, okay. Let's leave in those assumptions, but we could do cost of revenue, subscriptions. So actually a bit higher than what I originally thought. Okay. So 208,600. Okay, so I could still see a world where 20% margins play out. I guess 2020, yeah, that would have to be 2025. Okay. Cost of revenue services be 48,870. Cost of revenue total. Okay, so gross profit, that comes to 706.7. Zero 091. Seven two, okay. Okay, so actually increasing still. Maybe I this is probably for subscription as opposed to 80% gross. That could be pretty unlikely actually. But let's take a look at R&D. So R&D was 421, 237. Okay, so 421, 237. Whoa, okay. Yeah, I think I grossly overestimated then. Actually, let's take a look. So Brian's estimates. Okay, I think that is actually a really good sign. So if 421, 237, I traditionally thought that sales and marketing would be actually a pretty big expense on the line item. But it seems that the sales team is actually a lot more efficient than I thought. It's probably less headcount, but also I would have to understand maybe how the company is treating commissions. Okay, so 547. Oh. Paste value. Yeah, okay, so this already dropped to about 56% of... And I can see over time that this is actually pretty substantial. This is the biggest cost for a company like Confluent. So what if we did something where we looked at, say, 55%? So 56%, are they able to get to 20% one day? That could push the share price to about 42. Wow. Okay. Based on the sales and marketing. Wait, so if I did 63, what was that number? Comes out to about 2.8. If I do 56, 2.1. So about 700. I guess cumulatively it adds up though. Okay. %. Holy fuck. Okay. That's pretty insane. That's pretty insane. %, 3% of revenue. So that's about a 7% delta. Yeah, that is actually a decent amount. Oops. I can take a look at what my operating profit was earlier too. Okay, so G&A, let's take a look. $56. So it's still a bit more expensive than what I really originally thought. 56, 703. So Brian's estimates. Around 16% of revenues. Okay. So operating expenses, this comes to, should come to 22319. Okay, nice. So let's actually then I'll make this super clear that it's all hard coded. Okay. Shift towards consumption sales model. Okay, it does seem to be helping actually. So operating income, negative 419, right? 147, okay. So getting that down. It's a good trend to see. Oh, God. So I could see this as probably so 43%. Okay. So maybe like a 1% off the top. Do like 42 maybe? Bottom, top, and then right. Okay. Yeah, I could totally see a world where maybe sales efficiencies really helps. So 16%, okay. I'll revise this to about 15. Do no border. And then bottom, top, okay. Right. Yeah, I guess is it worth doing all these complex models? I think probably not, honestly. It takes a lot of time to keep track of, especially on the day of. It could reduce, yeah, maybe reduce the amount of, or the speed you have to react. So what's the end state here? About 16%, 7% of revenues. So 32% operating income, 32% operating income margin. Oof, okay. $38. Let's see. What's the stock at right now? 20% again, damn. guess, Foundry news. God. Okay, that's funny. Sales. Okay, interesting. So tariffs are a big thing. $20 per share. All right, it's almost 12. You gotta eat some lunch and then get back to us. I'll be back in a sec. Scent of, yeah, okay, so these net new numbers were just not right. Okay, so remaining net new The thing is, I don't think this really changes anything materially in the model though. Percent year over year. Okay. Okay, so this is actually a pretty big decline. And I do think that it is somewhat unwarranted. Wait, subscription revenue is actually let me just hard code these. And here, so 53, 47. So confluent cloud could very be okay, so this is starting to make a little bit more sense in terms of the numbers. So, NA, call it. So top line, okay, I do think that this is actually probably plus 2%. So 80% of revenues. I could definitely see a world where that is the case. Okay, that much in revenue though. Yeah, it's a bit much. If we think they're really going to accelerate by 36%. Plus 2, plus 3. Okay, yeah, what is guidance? I think so guidance, I remember they were guiding 1.1. Okay. One point one. Oops. I'll do 1.1 to 1.2. $1.117. It's about 4. 1.119. One 0, 0, 0. Okay. Okay, which is above what we're predicting here. So I'm definitely doing something wrong when it comes to the subscription part. So if I remember correctly, this is driven off of our subscription revenue, which is driven off of our, so we can increase our contract value to get 1111. So 11. That's my 5. I think customer count, I am seven point 7. Okay, that pushes us over 7.6. Okay, I swear that did not change. If I just do 7, 2, 1. Okay, yeah, I guess this could work for now. So guiding. I'm actually still under consensus right now for revenues. Yeah, we do see, okay. So maybe we could see like an 8% increase. This actually could have been like a, wait, what's X? 85% again? 13%, okay. This actually might be a bit much, minus 1%. Okay, so year-over-year revenues decreased by, yeah, maybe 10% is a bit much. I could do 9%. One, 2, 5, 3. Oh wow, that is really high. I do think I need to taper down the customer growth. Oh, well, actually, okay. Maybe it's the conversion rate that's a bit high. Yeah. I could do like a 3.5 conversion rate. I think this will push us down pretty high. Yeah. Okay, so I'll stick with this for now, and then go eat. I'm gonna send an email real quick, and then I'm gonna head out, get something to eat, and then come back, and then continue writing about the product development. Okay, I'll see you guys soon. Peace.